Good morning, ladies and gentlemen. Thank you for joining our webinar today. My name is Alexander Hrib, and I represent London-based company Vostok Capital. This webinar is a preview of important debates that will take place at our congress called Crude Oil, Oil Products and LPG Trading and Transportation in St. Petersburg that will take place on 26th, 27th of November. I should say that this is our 10th annual event, and we will have a great anniversary gala dinner and the award ceremony. So you are all very welcome to join us in St. Petersburg on 26th of November. Today we will speak about Russian-Iranian oil swaps deal and how you can exploit this unique commercial opportunity. You can feel free to send your questions at any time. You have such opportunity. You can type your questions in English or Russian. Quite a bit of our audience is in Russia and Kazakhstan. Let me mention that we will have a couple of polls during this webinar, and I will ask our participants to provide their answers. Sorry if there is a bit of noise. I don't know, maybe some of the participants need to switch off the mic. Yes, that's much better. I apologize. Sorry. We will have questions, like a polling, and people can answer the questions, so we will know the opinion of our audience. So let me start to introduce the topic of our webinar. Russia and Iran have agreed on bartering oil for goods worth up to $20 billion. That is related partly to sanctions, but also to the developing trade between Russia and Iran. And Russia plans to buy up to 500 million barrels a day in exchange for Russian goods and services. However, the recent information from Iranian TV was quoting government officials saying that there are some specific behavior of the Russian traders, money transfer issues, and lack of mutual trust that prevents from this deal developing. The proposed way forward for Russia and Iran is to cooperate and create a new market outside the existing global market, but linked to it through a new approach to energy swaps. And I would like to introduce our expert panel. Chris Cook is a former director of International Petroleum Exchange, now IC Europe, responsible among our innovations for the UK balancing point natural gas future contracts, and is a market expert and commentator who forecasted in March 2012 the oil price would fall to $45–55 per barrel when US dollar printing would end. Thank you for joining us from Oslo today, Chris. Chris, can you hear us?
Yes, indeed. A pleasure to be here, Alex. Seems to be a
Chris
little
will
bit.
Outline. There is some hissing noise, yes?
Yeah, it's okay now.
Chris will outline the crossroads at which the oil market now stands, the role of the Organization of Petroleum Producer OPEC, producing countries, and how the global Brent market benchmark price have been and continues to be manipulated, and how the market price is effectively capped. Then we will hand over to Sam Barden, who believes that the emerging energy market generally and the Eurasian market centered on the Caspian region specifically is probably the greatest commercial opportunity for 21st century for traders. Sam's careers in markets includes a decade in Moscow with major Russian investment institutions like Renaissance Capital and Trust Investment Bank, followed then by Dubai and Australia. He's building new markets and trade flows there. Sam observes global markets from the perspective of a professional market intermediary, trader, broker, and join us from Australia, from Melbourne, I understand. Welcome, Sam.
Thanks, Alex. Yes, thank you very much.
Finally, let me introduce. There is a time delay bit from Melbourne, just one second. Finally, let me introduce our third speaker from Iran, Mahmoud Khagani, formerly Director General of the National Iranian Oil Company and the Director for Caspian Sea Oil and Gas Affairs in the Petroleum Ministry. He was the originator of the Caspian oil swap for Caspian crude oil for oil delivered in the Persian Gulf and the gas for power swap between generation of energy swaps. Good morning, Mahmoud. So now when introduction is over, let me hand over to our first distinguished speaker, Chris Cook, who will present a couple of slides as well. Welcome, Chris.
Thanks very much, Alex. Thank you. Right. Hopefully the slide will come up on the screen very shortly. Right. Well, while we're waiting for that, here we are. As Alex said, my background is I used to be a director of the International Petroleum Exchange in London. While there, I architected the UK's natural gas balancing point contract and innovations like exchange of futures for swaps, volatility trades, etc. Then after that, I left and was involved in the area where markets and the internet came together, set up a .com, but remained a consultant in international oil and gas matters. In early 2001, I essentially blew the whistle on market manipulation that was going on settlement trading in Brent on the IPE, and that was not a good career move, you could say. And following that, I suggested to the Iranian government that there should be a Middle Eastern benchmark, and that suggestion in 2001 led subsequently to what became the Iran Oil Bourse project, which I think will be referred to later on. Now, my case is that the Brent benchmark price has essentially been broken since 2001, when, with the advent of the 40s blend, that at that point the control passed from Shell, essentially, who were the Brent providers, to BP in particular. Since 2001, the North Sea production has declined, so there's been the need to introduce further blends into the benchmark. But it's become less and less valid over the years since 2001 as North Sea production fell. And from 2005 to 2015, my case is that we have seen the introduction into the market, and this has not been and remains invisible to most of the traders in the market. Only 2 or 3 players actually know what has been going on in the market from between 2005 and 2015. And what we have seen is the type of deal that Enron invented, which is essentially prepay. You purchase the physical and then you sell forward, and essentially you are lending oil and you are borrowing dollars from the financier. And that came about between, on the one hand, you had a producer like BP, and on the other, you had a consumer, or should we say an investor, who was investing in what was known as inflation hedging. This was the advent of exchange-traded funds with customers who wanted to maintain the value of their investment by investing in oil. They weren't interested in a return on their capital, they were interested in a return of their capital. And that form of investment, passive investment, grew over a period of years and was accommodated directly by the ability for investment banks to bring them together with producers who actually wished to monetize oil, shall we say, in the ground or in tank. And what we saw was the gradual ramping of price from 2005 to 2007 and 8. And you will recall that between 2007 and 2009, the market price went from $80 a barrel to $147 a barrel in July of 2008, only to fall within 6 months to $35 a barrel when the global financial crisis came and trade credit to finance oil trading for many people was not available. And then the price rebounded once again to $80 by the middle of 2009. Now, during that period of unprecedented volatility, the actual supply and physical consumption of oil changed by maybe 3%. So what we were talking about here was massive influxes of money into and out of the market. I'm sure the audience here is well aware of what was going on. But underpinning this were invisible deals of prepay deals. What was happening was that there were a two-tier physical market began to take place, where some of the oil was actually tied up, and in the ownership it was being leased to other players in the market. And this actually gave an advantage to those firms who were aware of what was going on. So there was a massive asymmetry of information, and that remains to this day because this tactic is still in use. Now, from 2005 to 2008, what we saw was a gradual rise in price, and this is the first point I wish to make, that ever since the advent of commodity trading and commodity sales, it has always been in the interests of producers, if they can, to support the price. So we've seen the tin markets, we saw cocoa, coffee. Whenever a producer can support the price with other people's money, he will, because of course he's going to make more money by doing so. And so we actually saw the price pumped up until it became unsustainable and collapsed. Now through 2008, we actually saw the OPEC, they cut production, and by December they cut production again, and it seemed at the time to make no difference. And then Obama came into office in early 2009, and during that extraordinary period of maybe 6 to 9 months, we saw the market condition of super contango, and you all know what a contango is. We had on the one hand a super contango, which indicated that the market was oversupplied, so material was being stored all around the UK. There were 54 cargoes stored around the UK. So on the one hand, you have massive oversupply, apparently, and on the other hand, you have a rapidly increasing price. Now that, which is an indication of undersupply in the market, that paradox has never been resolved. And in my view, the reason that this occurred was that financial demand was coming into the market via prepay, that somebody, and in my view, this was a combination of investment funds and the producers themselves, Saudis and the GCC, were actually investing and funding the inventory and basically taking the material off market so that the price could be pumped back up again. And then we saw for the next 5 years the price was maintained with a market floor of about $80, and it never really went too much above $120. But if you look carefully at the price in the gasoline price off the coast, the US gasoline price, you'll actually see what was going on. Now the point I'm getting to is the market was being inflated, and I said in 2012 that the price was being inflated and would decline once the liquidity, quantitative easing ended, which it did in late 2014. The price was then pumped back up again in January, early this year. But the problem with the strategy that we've seen is that storage is not infinite. That there's a limit to storage. There is no limit to capital. You need two things to keep the price up. You need capital and you need liquidity. The capital is there, the liquidity is there with Euro quantitative easing now, but there's a limit of storage, and that is why this long attempt to manipulate the price was, in the end, it's failed, and the price is now coming back down. In my view, this was all, the fundamental motivation behind this was the US's wish to have prices high enough to fund the development of shale oil. A price over $80 for 5 years enabled them to fund shale oil, and having done that, they are now able to rid themselves of reliance upon the Saudis, and have now actually moved to looking at low-cost oil in Iran and Iraq. And in my view, the market is now capped at $60 to $70 a barrel by shale oil in the US. It's a bit like a strategic petroleum reserve, second tier. Also, renewables kick in at that price and substitute for oil. And energy efficiency, well, in the US we saw a reduction in use of about 2 million barrels per day, purely due to energy efficiency measures and more efficient cars and whatnot. As Yamani said, the Stone Age didn't end through shortage of stones, and the oil age isn't ending through a shortage of oil. And I believe that we're seeing a transition now from energy as a commodity market to something else. And this represents the greatest business opportunity of the 21st century. On to the next slide, please. It's the second one. Right. Could I have the next slide, please? Thank you. Now, the way I see the future is that oil and gas will be supplied rather than sold, that a producer will enter into agreements with a refiner or a consumer on a swap basis. So we're talking about the flow of oil rather than particular transactions, and that it will be possible to, shall we say, democratize the form of prepay energy transactions, which have been taking place in the market by a privileged few. There are a few players who actually know what the situation is in the oil market, and they are absolutely making huge profits. This is what we've just recently seen. It's going on right now. There are certain players who know where the actual ownership of the oil is. Other players, they actually think that the oil is in hands and the economic interest has been sold. So we have a two-tier market. If, on the other hand, we are able to create a new asset class of prepay energy credit so that everybody is transparently able to use this asset class, and we'll be hearing more about this, we'll move to a different market paradigm of something, I call it energy as a service rather than energy as a commodity, and the roles of the different players will change to the advantage of the people in the market who understand what is going on. One of the advantages of this is that capital is required only for operating costs, not for risk, because the risk, the market price risk, has passed to the end user, and similarly the credit risk is taken with the prepay transaction. And we will also see a move, because it becomes advantageous to look at the market in terms of least carbon fuel cost pricing against energy, and rather than pricing against dollars or euros. Also in this paradigm, we're moving away from competition, you could say we'll be competing for quality, to collaboration and transparency in actually saving costs. So I like to say that the big trade, or one of the big trades of the 21st century, which traders can take advantage of as they change, that is essentially what traders have is intellectual value between their ears. What you'd be talking about in the future is the exchange of that intellectual value for the value of carbon fuel savings, and that's where the money is going to be made in the next, for the rest of the century. So that's my introduction. I'd like now to hand over to my colleagues who will be talking more about what we mean by swaps, and also what we mean by prepay energy credits, what they are and how they work. Thank you very much. Over to you, Mahmoud.
Thanks very much, Chris. I'm in a city near to Turkmenistan border, which obviously we started the swap of oil, Caspian oil, initially with Turkmenistan some years ago. The program under which this swap operation started was named in Iran Caspian Region Oil Swap Project. We had first a 16-inch Neka to Sari pipeline for 50,000 barrels a day, then a 32-inch pipeline for 120,000, and then it was increased to 370, and currently is 500,000 barrel per day capacity is available there. And then we moved from oil swap. It was actually very good for those who produced oil in the Caspian region and Iran for importing it. But unfortunately it stopped for some reasons during the last 3 years, which now government and Minister of Petroleum are very keen to resume this swap of oil operation. I was also involved myself in my career before my retirement with gas to power exchange, and this was initially agreed with Armenia, and we supply gas to Armenia and import power from Armenia. And this project is now again on the agenda in more general format as for Caspian region, and particularly as the Caspian is more producing gas in comparison with the volume of oil. So it could be actually a good project for converting gas to power and exporting power via Iran. And then another ideas that we pursued in those days was oil for products. We are importing petroleum products from Caspian region, for example, LPG from Uzbekistan, some by train, some by vessels from Caspian ports, gas oil and gasoline. These are also the trades. At the moment, these type of trades are more conducted by private sector. In the old days, it was me as a government official involved with it. Gas for power and petrochemicals. As you know, Iran petrochemical industry is well developed. And recently, the petrochemical industry in Iran had written a letter to the president warning him that we may lose greatly in profits, and even we may become in financial difficulties if gas is not supplied to the petrochemical industry as a favorite price, which I have promoting the idea that this petrochemical industry of Iran could enter into partnership, and Chris could elaborate on this idea, gas for oil, and I can call it energy swap, because that is also another possibilities which we can consider. Iran at the moment has a great program, especially for the coming 5 years development plan, 6th plan, according to NIGC, which today is the 50th year of its its birthday today. They say they have a plan for CNG, not only for fuel to replace for gasoline or diesel fuel for transport industry, but for other purposes. And when we come to the role of Iran, Iran has a very unique geo-energy position in the global map. And I'm always promoting the idea of depoliticizing the energy industry, and in particular oil and gas industry. If that is done, for example, the largest oil field in last 3 or 4 decades discovered in North Caspian, in Kashagan region of Kazakhstan. Initial production, again in 2016, needs an exit route. And Iran could be the best economically viable and environmentally safe route for this crude to get to international market. Constructions from Turkmenistan to Iran, and then later on Shell studied the environmental impact assessment, and Total defined a project called Ketyok, Kazakhstan, Turkmenistan oil pipeline. So this is another option for further development in a relationship between the region and especially Russia and Iran in the post-sanction era. And with Russia, Iran could do a lot of cooperation in the energy industry. As I informed my friends earlier, yesterday evening, the Lukoil chairman was in the Minister Zangan's office. They exchanged views. Lukoil expressed interest to come to be active in Iran upstream projects, and also some new ideas that they have discussed with regard to cooperation in the Caspian region. As you all know, that Iran owns 10% of Shahdani's gas project in Azerbaijan. Lukoil also has a 10% share there. So therefore, the possibility of cooperation between Iran and Russia is enormous in post-sanction area. What is now defined, I think Chris is pioneer of this idea, is Caspian energy grid for gas to power. Russia has long have interest to export power via Iran. As you know, with regard to Armenia, most of power generating capacities in Armenia are directly or indirectly owned by Russians, and also the gas pipeline, domestic gas distribution pipelines. So according to Iran Ministry of Energy, which is responsible for power generating and distributing and export, Iran currently has 73,000 megawatt power generating capacity, but this has to be increased by 20% in the short term. And as a result of recent domestic demand, which has been increased, now we are experiencing about 20% of increase in demand. The Ministry of Energy says their export capacity has now been declining by 10%, and import has increased by 10%, and they think they have the capacity of increasing the power export 10 times of the capacity which is existing now. To summarize, I could say that Iran and Russia oil product and fuel oil transport swaps with refineries and shippers, considering that refineries are now privatized in Iran, and we can have a kind of energy swap agreement with Russians, so we can deliver oil on their behalf to Eastern market, and they can deliver oil on our behalf to Northwest Europe perhaps, and anywhere else, which obviously reduces the cost of transportation. And I now stop here and ask Sam, who is well experienced in trading and especially in Russia and Iran market, to elaborate on the possibilities in this regard. Thank you very much.
Thank you, Chris. Thanks, Mahmoud.
Thank you, Mahmoud. It's Alexander in London here. Let me just briefly remind our audience that we have an opportunity to ask questions, and you are welcome to submit your questions and put forward them to our speakers at any time. Also, we would like to run a small poll, and you will have a question. Do you believe that the Russian-Iranian oil swap deal might present a good commercial opportunity for your business? While we are handing over to Sam and preparing his presentation, you might as well answer this question on your screen at the moment, and we will have results shortly. So this is the question you have on your screens. Feel free to answer, and feel free also to ask questions. And now I hand over to Sam in Melbourne.
Thanks, Alex, and thanks, Chris, and thanks, Mahmoud, for your description. So what we've looked at from Chris, we've had a look at the framework and architecture of a possible market. From Mahmoud, we've heard some examples of swaps. And from me, I want to talk about how we tie that together and how we can actually trade and monetize that value and what it means from a trading point of view. And so I want to talk about prepaid credits specifically, what it is, how it works, and why we should improve energy supplied, and it's measured in units of energy. But a prepay is not debt. There's no right to demand money. It's not a derivative. There's no right to demand energy delivery, and it's not a CFD, a contract for difference. And it's not equity. There's no ownership right over the underlying asset. Prepaid credits may be used instead of dollars and euros to pay contracts, which we can deploy energy prepaid credits to. So the first one there, the Turkmenistan gas hub, using their gas to generate and send electricity to Kazakhstan and Azerbaijan, and swapping that electricity for gas for export from Azerbaijan and Kazakhstan using energy prepaid credits. Oil for product. This is obviously a very important one. Oil for product with Iran and Russia. So Russia and Iran can swap oil value for goods using prepay energy credit. Russia uses rubles to buy the prepay energy credits from Iran, listed in both Russia and Iran uses the prepay credits to buy products from Russia. Iran can convert them back into rubles. This provides a framework of trust and removes the counterparty risk of banks and intermediaries as settlement occurs via the exchange. Feedstock for petrochemicals is another swap. So the olefins and aromatics can be swapped for petrochemicals using energy to settle imbalances. And as Mahmoud mentioned, this is the petrochemical industry is an increasing industry in the Middle East. Predominantly it's been dominated in the US and part of Europe, so it's very much a growth market. Carbon fuel for transport. Shipping contracts can be unitized to trade alongside cargoes of oil and gas and priced in energy prepaid credit. At delivery, the contracts come together and bunker fuel costs settled in prepaid credits. Again, Mahmoud alluded to that. So on the next slide, we ask a very simple question. What is the value proposition? Just wait for that slide to appear on our screen. There it is. So what is the value proposition? Well, for the producers, they get an interest-free loan and they lock in price. For the consumers, they lock in price and they hedge inflation. And those two together provide security of supply and demand. For the investors, they get to hedge energy inflation. And even if investors will not buy, consumers will always buy at a discount to the physical market price. And the kind of outcomes that we're looking at here, we get banks and trading houses use energy prepaid credit unitization, which will replace securitization. So it removes the stress from the balance sheets and of banks and trading houses and counterparty risk, because it's all exchange traded, and I guess it's, you know, for want of a better expression or comparison, it's a bit like a turbocharged ETF. We'll also create a liquidity pool of currency by its very nature in a low-risk regulated environment, being the exchange. And so what we're looking at is a basket of currencies benchmarked to gas in a 24-hour multi-currency electronic trading environment of the same products on multiple exchanges. And the outcome of that, of course, is going to be greater price transparency and transaction speed, which results in increased trading volume and reduced volatility. So if you have just looking at the top half of that slide, you can see the sort of physical sell side to buy side transport of oil doesn't change, product transportation. However, the way we account for it and manage the risk is very, very different. It's exchanges into currencies into gas and back again. So next slide, please. In terms of, we'll just wait for the next slide to come up. There it is. So just to put it in perspective, Middle East gas exports to the global market necessitates that regional supply and demand in the Caspian is balanced as part of the global equation. And the reason and why we do this, so a Caspian pricing point would be the benchmark for pricing in the region and would balance against other price points globally. And this diagram just shows that the ability to move Caspian gas all around the world means that it will naturally become part of a global pricing mechanism, and therefore we need to make sure that the supply-demand equation within the region is balanced. Okay, so on our next slide is where we really talk about how the trading works and what the examples are. Just wait for that slide to come up, please. Okay. So I can't see my last slide, but I can tell you all about it. Here it is. So what are some working examples, live working examples of the use of prepaid credit, and what are the outcomes and why we should be doing it, and why is there such great value for the trading community? So the outcomes of using prepaid energy is settlement of swap balances, there's the payment of fuel subsidies, energy dividend, energy loans, interest-free funding of infrastructure, and importantly, as Chris mentioned earlier, the ability to monetize carbon fuel savings simply and effectively. So how does all of this actually work in practice? Let's look at, for example, Gazprom financing. Gazprom currently has conventional loans priced in dollars, and the banks are undercapitalized and unable to lend in many cases. So what could we do by using prepaid credits? Gazprom could sell gas energy prepaid credits to the market at an agreed discount. Gazprom would then receive an agreed currency, rubles if they wanted, dollars, euros, whichever they chose. Russia supplies gas within the gas clearing union framework of trust, or we might call this the Eurasian Economic Union, for example. Russia is credited with units from this union, and the units reduce Russia's gas loan. And if we look at the Iran development financing and the Iranian petroleum contract, we'll look at these together, so the Iran IPC and Iran development financing. So there's been a lot of talk about Iran issuing some kind of bond against their hydrocarbon industry to provide liquidity and trust in the markets as they open up to Western investment. So banks in Iran represent large and unknown risks. Nobody knows much about them. There are a lot of banks in Iran, but not a lot of banking. So a much better outcome would be for Iran to issue energy prepaid credits via an exchange, and I favour the Iran oil bourse on Kish Island, which would provide a natural liquidity hub of multiple currencies through energy prepaid credits in an international tax-free environment. This would, via the exchange, help capitalise the Iranian banking system while reducing balance sheet and counterparty risk. So energy prepaid credits issued at a discount are in fact Sharia compliant, so would act somewhat like a sukuk, except the risk profile would be much lower and distributed. So Russia can do exactly the same thing and use prepaid energy credits for the development of the Russian hydrocarbons industry as well. So the outcomes for Caspian prepaid credit financing for both Russia and Iran would be financing for new developments. It would create and issue prepaid credits and sell them into the market to raise interest-free finance for new fields, and it could be done through, for example, a $15 billion sukuk. And the Caspian prepaid credit funding piece, through equity release, would get infrastructure upgrades, pipeline upgrades, new wells, and enhancing the value of already producing assets, for example, such as the 28-phase development of the South Pars field. Now I want to talk specifically about the IPC, as we know it, or the Iran Petroleum contract. So the Iran Petroleum contract has all the elements of success with collaboration, with competitive terms, and to some extent with pricing, to more an extent if the Caspian pricing hub would be used. But when it comes to booking of reserves, there's a big question mark. There's no real solution for foreign companies booking of reserves in a joint venture with Iran. Under Iranian law, ownership of reserves cannot be transferred to a foreign company. So this makes it harder for the international JV partner to raise development capital against reserves, which is a usual practice. However, if energy prepaid credits were used, then the foreign company JV can use the prepaid credits as assets asset value for the reserves still in the ground, and that will make it much easier to raise development capital using energy prepaid credits. So if we look at another one of the examples in the cases here, Iran, Russia, China gas supply. So we call them the E3 or the energy 3. So what would that mean? So Russia, Iran, China, from China's point of view, using energy prepaid credits, China would buy 1 billion units at $5 or the yuan equivalent per MMBTU of gas against the Caspian spot price of, for example, $6 MMBTU or equivalent. China redeems the units against supply received from Russia, Iran, or any other gas clearing union member. China locks in the price by paying it forward. Discounted price gives implicit return to redemption, and China may sell the units into the market to financial investors at any time. So what does it look like from Russia and Iran's point of view? Russia and Iran sell 1 billion units at, say, $5 of yuan or ruble or real equivalent against a market price of, for example, $6 or equivalent in any other currency, MMBTU of gas. A gas loan, so what Russia and Iran would get is a gas loan with no compound interest, and by that I mean no need for dollars paid for the use of dollars. It drastically reduces funding costs, budgetary certainty from forward sales, and they may buy back units in the market at any time for cancellation. So the China outcome, Russia, Iran, China, the outcome, what we'd be looking at is the pricing of a contract. The pricing of the contract against the US dollar is replaced by pricing against gas. We'll say that again. Pricing of the contract against the US dollar is replaced by pricing against gas. And this could be the potential anchor contract for the Eurasian Energy Clearing Union, for example, or Caspian Energy Clearing Union. And the result, the best part of the outcome, of course, is the security of supply and demand. And then when we look at renewable energy development, because Chris has mentioned renewable energy in his presentation, energy prepaid credits can be used for the development of solar, wind, hydro, or thermal. And I'm currently in Melbourne, which has been voted as the world's most livable city. And I'm down here because in Australia we're launching a solar energy company using energy prepaid credits. It's called MyEGen, which means My Energy Generation. And the prepaid credits finance the build of a utility-scale solar farm, and the production of electricity once built goes on giving financing and a return through electricity supplied. So pulling all of this together, we know that, as Chris stated earlier, investment in energy efficiency and carbon fuel saved. This is the big trade of the 21st century, and I'll quote Chris here again. The transition trade will be the exchange of intellectual value for the value of carbon fuel saved and renewable energy generated. That sounds great. What does it mean? What does it mean for us traders? How do we get value out of that statement? Prepaid credits will do a number of things, but one of the things will be the mergence, the bringing together rather than the competition of renewable energy and carbon-based energy into a single market. Now, the cheapest form of energy is energy saved. So since energy prepaid credits are based and measured on energy units rather than currency value, there is a natural incentive to want to use your energy as efficiently as possible to maximize the value of your prepaid energy credits. So investment into energy efficiency and the production of renewable energy means that using energy prepaid credits, you're able to monetize carbon fuel savings. This is a huge and completely undeveloped market. I'm going to repeat that. So investments into energy efficiency and the production of renewable energy means that using energy prepaid credits, you're able to monetize carbon fuel savings. And for Russia and Iran, being able to monetize carbon fuel savings through swaps, grid efficiency upgrades and infrastructure investment, and using renewable energy for domestic consumption will literally be like winning the lottery for each country. So that's it for me. It's back to you, Alex, and time for some questions, I hope.
Thank you, Sam. We've indeed got a couple of questions, but before we proceed to questions and answers, I would like to say that we go for the next question for our polling, for our audience, and I will announce results of the previous. So the previous question was, do you believe that the Russian-Iranian oil swap deal might present a good commercial opportunity for your business? We had 44% of our audience voting. 53 said yes, if there is a clear legal framework and transparent mechanism for trade, and 47 said no, it is a political deal that will never be implemented. And now we have a second question. Do you think that trading oil internationally without using US dollars would be economically viable, right? So while our audience is voting, I will introduce our next question. So we just mentioned in these presentations Eurasian Clearing Union, and that other countries a part of Russia and Iran can join. And we have a question actually from Thailand, from Sichon Janternit. She is writing, I am a managing director in Kreneft Company Limited in Bangkok, Thailand. Can you advise how other countries who are part of Russia or Iran could be involved in swapping oil or making trade with Iran, considering that there are sanctions still? So who would like to take that first question?
Right.
Chris, Mahmoud?
Well, can I start?
How other countries could join in?
And Chris can elaborate on that, and as well as some. I believe 4 of Caspian littoral states, that i.e. Kazakhstan, Turkmenistan, Republic of Azerbaijan, and Iran, are a member of a regional economic cooperation, which its headquarters is based in Tehran. Current Secretary General is from Turkey. And in my opinion, Chris, some couple of years ago, defined a new concept, which he called it energy accord. But it was mistranslated somehow into Eco-Energy Charter. But Energy Charter came in support of it. Chris, could you elaborate on this? Because I believe, apart from Russia, all these countries, 10 member states of ECO, could play a role in this. And mind you, yesterday I spoke to ECO Secretariat and asked them, can, for example, Russia to become a member of the organization or not? They said Russia, if applies, could become initially observer at the organization. So therefore, there is a possibility of Russia in the future to join this organization as well.
Well, I think you have to distinguish. Thanks for that, Mahmoud. You have to distinguish between the countries, of course, and the commercial companies as well. We're operating on the G2G basis, which is the governments. But of course, you also have B2B, business-to-business relationships, and that's what we're really focusing on here, which is the trading relationships between the different countries within, whether it's the eco-region or the wider, maybe Eurasian. And the future that I envisage is that we will see not so much new organizations as new agreements. I talk about a clearing union, and what I'm talking about is essentially a mutual guarantee agreement within which participants may engage with each other. I call it a framework of trust. Now, there's nothing new about this. In London, we have ship owners have been clubbing together for 140 years in what are called protection and indemnity clubs, P&I clubs, ship owners, to actually mutually insure the risks which Lloyd's of London will not take. And these risk-sharing framework agreements, obviously they have a manager, in this case it's called Thomas Miller in London. I believe that we will see, for instance, the Thailand traders, of which I think Kreneft is obviously one, being able to engage with other countries or members, you know, businesses from other countries. And I think there's a major role here for the international chamber, for the chambers of commerce, Mahmoud. You know, so we will see the G2G coming together within ECO, and the businesses coming together within the framework of their chambers of commerce. And that's the way I see this working, with mutual clearing unions mutually insuring the risk of transaction non-performance, and the fact that maybe somebody, because what is needed here is for different businesses to be confident that they can accept each other's energy credits in settlement. That's where this leads. Sam, do you want to add anything to that?
Yeah, I'd love to add something to that, Chris. Firstly, what I'd like to say is, just for the avoidance of any doubt, I believe that there's absolutely no way that sanctions on Iranian oil will or can remain in place. I think we're well and truly past that stage. We've already seen that the United Nations sanctions have been removed, and we know that there are some lingering, and will be some lingering US Treasury sanctions perhaps, and banking sanctions, which essentially is going to keep American companies out of the market, and they're going to miss a big opportunity. But in relation to Thailand traders and any other Asian traders, I think it's a very, very straightforward proposition where we're talking about the framework of trust. We talk about inter-country trust that exists. That is something like the Eurasian Trading Union, could be the Caspian Clearing Union through the Economic Cooperation organisation, but I kind of tend to favour the Eurasian model. And I think, when we talk about how do we transact and how do we get involved, well, it's through the exchanges. And the exchanges, it's going to be a little bit like we did with MICEX, Moscow Interbank Currency Exchange, back in the early 2000s, when we were struggling for liquidity in the Russian equity market because we were using the Russian trading system, which didn't have didn't have a sort of a counterparty risk mechanism reduction because you were dealing directly with another counterpart in the OTC market. So we moved business across to MICEX, and essentially you either had to have the cash or the paper to be able to enter that market. And it was exchange settled, and so your counterparty risk and failure was much, much, much lower. In fact, it was pretty much impossible. And although nothing's impossible. So when we take that example and use it in the exchange environment, if we use, say, the International Oil Bourse, we had perhaps, an exchange like the St. Petersburg Mercantile Exchange, which is the main trader of Russian oil and gas products and has been for many, many years. I remember we used to trade Gazprom locals through that exchange. And then perhaps, when I was talking about the E3, you might have an exchange somewhere in China, maybe Hong Kong or Shanghai, and for those Asian traders, they can enter the Iranian oil bourse directly through Kish Island. As I said, it's an international zone, so you don't have issues, you don't have in-country issues. The credits are delivered there by the Iran oil companies, and you're able to buy them as long as you've got the ability to put the cash to do that through the exchange. So I think, in answer to the question, the opportunity for Thai and Asian, for anyone in the Asian market is as big as everyone else, and the liquidity pool will be created will be enormous, and that liquidity will create transparency, which will create value, which is what will make everyone very happy and sustainable and wealthy, no doubt.
Thank you, Sam. Let me just come in here with a second, or actually our third poll. We have results also to question number 2. Do you think that trading oil internationally without using US dollars would be economically viable? We have 60% of our audience voting, taking part in the vote. 68% said yes, it is possible, but only on a bilateral basis. 24% said yes, it is entirely possible and should be a #1 priority for all oil-producing countries, and 8% answered no, oil has always been sold in US dollars worldwide, and this would never change. So that's the result of our second questions, and now you have on your screen question number 3. Would you consider adopting energy swap principles discussed at this webinar for your business? And while our audience has an opportunity to vote and ask more questions, I will switch to a question that we received from Pavel Abrashkin, who is a chief specialist at Asta Agidel, and he is interested, very practical question. He represents Port Agidel on the Volga River. He is asking if his port can get cargo flow coming out of this deal between Russia and Iran. And I suppose the broader question would be, are we talking about actual physical exchange of oil between Russia and Iran, or it will be swaps? So who would like to take that question?
Ahmed, I think you're the Caspian specialist.
Sam, maybe you as a trader could answer.
I don't know where this river could be connected to Caspian Sea, but Caspian Sea currently has only one gate for vessels to come in and getting out is the Volga River, and obviously that's Russia is control of Volga River. And if Russia agrees for these vessels to leave Caspian, taking oil from Caspian region, so that would be possible. But it won't be Iranian oil because it, in my opinion, it won't be economically viable to pump Iranian oil to the Caspian coast and load it to a vessel to go there. But it could be exactly reverse. If other oils can come to Iran via that river through Caspian to Neckar port, and then it could be exchanged for other oils, why not? That can be also considered. With regard to, can I also make a comment on the oil trade with currencies other than dollar, or perhaps I can do it later on?
Do it now, Mark.
Very shortly, because we have 3 minutes left. Yes.
I think it was Sam told me, one of the economists, I think UK economist, said, you let me have the currency of a country, the control of it, and then I don't care who is ruling that country. And that is actually experienced in Iran, particularly during sanctions. Economy was dependent on oil revenue, and oil revenue was dependent on dollar currency. And now Russia is facing the similar situation, and I think there is no other options than the producers like Iran and Russia and others use this experience and change and switch from dollar as a currency for oil trade to energy swap. Thank you.
Can I just jump in there quickly on the trading, Alex? Yep. So I think in regards to Russia and Iran.
Yes, please, just 30 seconds. Yep.
Yep. In terms of Russia and Iran will be the anchors that create a Caspian or Eurasian trading union that will bring other countries in. And I think it's very heartening that the market does believe that we can trade in other currencies other than the US dollar. And let me say that is something that's complementary to the current market. It's not a piece of disruption. It's about creating value through energy efficiency. It's not about not using the US dollar.
Yeah, it's additional. It's not
correct.
Yeah.
Yep.
Thank you very much. Yes. We are running out of time. Thank you very much, Chris Cook and Sam Barden. And presentation later on to all the participants. I can just announce that 53% voted for our previous number 3 question. Would you consider adopting energy swaps principle discussed at the webinar for your business? And 68% said yes. So this is very encouraging news. I would like to remind you that this topic would be discussed at our St. Petersburg Congress on 26th, 27th of November. At our flagship event, Crude Oil, Oil Products and LPG Trading and Transportation 2015 in Russia. You are all very welcome, and we will get in touch soon. Thank you.
Thank you. And I also thanks all the participants listening to us.
Thanks.